Welcome back to Investing Talk Podcast. Today, we're taking an in-depth look at Planet Labs and its upcoming earnings report. We're going to unpack all the essential details from our sources, giving you, hopefully, a clear picture of what to expect and why it matters. Before we jump in, if you find value in our discussions, please do consider subscribing, liking, and maybe leaving a comment. Your support really helps us out immensely. And if you'd like to help us out even further, you can always buy us a coffee. Also, definitely let us know if there's a specific company you'd like us to look into. Just leave a comment below.
Absolutely. And understanding a company's earnings report before it drops is just crucial, isn't it? Especially for making informed decisions. Planet Labs is, well, it's a really unique company in an emerging sector, so the context here is particularly interesting.
Okay, let's jump right in then. What's the immediate need to know regarding their upcoming report? When exactly is it, and what are the analysts predicting?
Right. So what's fascinating here is the report is scheduled for September 8th, 2025. It'll be released before the market opens. For Q2 FY 2026, the consensus from about 10 analysts puts revenue around $65.93 million. Now, that would represent a modest 7.93% year-over-year growth. So growth, but maybe not explosive.
Modest growth, okay. And earnings per share.
Yeah, on the EPS side, we see some slight variation in the estimates. Zacks is at -3 cents. S&P Moomoo consensus is a bit lower at -8 cents. But, both of those point towards a pretty significant year-over-year improvement. They're narrowing those losses.
Okay, so definitely improving, narrowing losses, but still negative EPS. That's the key takeaway there.
Exactly. Progress towards profitability is really the main story, not just, small growth numbers.
Gotcha. And any whisper numbers floating around, those sometimes give us a little peek behind the curtain.
Not for Planet Labs this quarter, actually, at least not according to our usual sources. And it's also worth noting the company itself hasn't provided explicit Q2 revenue or EPS guidance in their public releases for this quarter.
Oh, interesting. No official guidance.
No, which sometimes leaves a bit more room for interpretation, puts more weight on that analyst consensus.
Right. That makes sense. It makes the analyst numbers even more important.
Yeah.
Okay, now, this is where it's really interesting for me. How has Planet Labs performed historically, especially in recent quarters, and how did the market react? Do they tend to surprise people?
Yeah, looking back at the last 4 quarters, there's definitely a pattern emerging. In the most recent one, Q1 FY 2026, Planet Labs reported an EPS of $0, which was, it significantly beat Zacks' consensus of -5 cents. That was a 100% positive surprise. Pretty impressive.
Wow, 0 EPS. That's quite a beat.
It was. Now, before that, Q4 FY 2025 and Q3 FY 2025, those were pretty much in line with estimates, -7 cents and -10 cents respectively. And Q2 FY 2025 saw just a slight beat at -11 cents versus an estimate of -12.
So they've shown some ability to meet, or like you said, slightly exceed expectations on EPS, especially with that 0 number recently. But what about the market's reaction? Does a beat automatically mean the stock jumps? Do investors cheer or...
Well, that's the critical question, isn't it? And it touches on a broader market theme right now, market chameleon data. It shows that post-earnings price reactions generally fall in the, say, -4% to +6% range for similar companies. However, for Planet Labs specifically, the reactions have actually been quite muted in recent quarters.
Muted, even after that big Q1 beat.
Yeah, even that report only led to about a -4.2% move. So if we connect this to the bigger picture, it really suggests that even a beat might not trigger a massive rally, not without a significant shift in the underlying narrative or, really strong guidance.
That's a really important point. Investors want more than just hitting the number. They want the story, the future path.
Exactly. Especially for emerging tech, they're prioritizing that compelling future narrative, that clear path to cash flow.
Okay, so the market reaction is maybe a bit cautious. But what about the underlying fundamentals? Revenue, profitability trends, are they moving the right way?
They are. Generally speaking, revenue has shown modest sequential and year-over-year growth. It's been in that $61 to $64 million range, and the current Q2 estimate is a bit higher, $65.9 million. So a steady, slight upward trend.
Okay, steady revenue growth.
And critically, the net loss per share is narrowing. That's a key signal, shows improving operating leverage, they're getting, more efficient.
Better efficiency, smaller losses per dollar of revenue.
Right. But, and this is the important point, the company is not yet profitable. Still burning cash.
They're still not profitable. That remains the big hurdle, especially now.
Absolutely. It's a major focus for investors in this climate.
Okay. Moving beyond the pure numbers, what else has been going on with Planet Labs itself or its sector during this past quarter? Any major news, big deals. Or conversely, significant headwinds that could kind of color this report.
That's a good question, looking at the broader context. During the quarter itself, our sources indicate it was actually pretty quiet. No major mergers, acquisitions, or, widely reported large customer wins or losses for Planet Labs.
Really. A quiet quarter on the news front.
Seems so. I mean, they might have announced smaller contracts, things like that, but nothing really material that made it onto the major financial news wires.
A quiet quarter.
Hmm.
For a company in this kind of capital-intensive sector, what does that actually tell us? Are they just heads down executing, maybe? Focusing internally?
That's a really perceptive way to look at it. Yeah, in commercial Earth observation, with all the satellites and ground stations, a quiet news quarter doesn't necessarily mean nothing's happening. It could very well mean intense internal focus, refining their tech, their data analytics, maybe quietly expanding the constellation. The operational side is incredibly complex.
Right, imaging the entire planet daily. There's a lot going on behind the scenes.
Exactly. So incremental improvements in efficiency, data delivery, those can be huge, even if they don't make headlines, suggests they're proving the model.
Okay, so maybe focusing inward. But no company exists in a bubble. What about the industry, the satellite and commercial Earth observation space? Any particular trends there?
That's crucial context. It's still very much an emerging field. Huge potential, but unique challenges too. And right now, it's facing some significant macroeconomic headwinds, primarily tight capital markets for growth companies.
The funding environment. Always key for growth stocks.
Definitely. Higher interest rates, general risk-off sentiment. It means investors are putting a lot of emphasis on a clear path to profitability, a demonstrable path. We've seen related companies in the sector facing, valuation compression because of this.
So it's tough out there for companies needing capital to grow.
It is. It's like running a marathon, but the market keeps asking when you're going to sprint.
That's a good analogy. And given Planet Labs' model launching satellites, maintaining them, that's asset heavy. How do these tight capital markets specifically impact them?
You're hitting on a critical point there. For Planet Labs, it's not just about the cost of borrowing money. It can directly impact their long-term growth. Launching satellites, expanding ground infrastructure, that costs a lot of money.
Right. Big upfront investments.
So if funding gets more expensive or just harder to get, it could potentially slow down how fast they can refresh their satellites, increase revisit rates, build out new capabilities.
Which could impact their competitive edge.
Potentially, yeah. Especially against competitors with deeper pockets or maybe more mature funding situations. It forces them to be really careful, really efficient with their capital, prioritize immediate returns.
Discipline is key then. So in this tough environment, how are the analysts feeling specifically about Planet Labs? Are they getting nervous or still generally positive?
Well, according to MarketBeat and Zacks, the sentiment seems to remain generally neutral. There haven't been any major Wall Street upgrades or downgrades recently in the weeks leading up to the report. Kind of reinforces that quiet news period we talked about.
Neutral sentiment, so waiting for more evidence.
Exactly. The focus from Analyst seems to be squarely on execution. They're watching that backlog growth that's a key forward indicator, and especially progress on margin improvement. They want signs of that operational discipline, that credible path to profitability.
Okay, so execution, backlog, margins. That's what Wall Street's watching. Now, with all these moving parts, the numbers, the history, the quiet quarter, the headwinds, what is the market expecting in terms of a price move? That implied volatility, what does it tell us?
Market Chameleon gives us some insight here. The earnings anchored implied straddle, which basically estimates the expected one-day price move. It typically falls in the 10% to 14% range for Planet Labs, give or take.
10 to 14%. That's a pretty decent potential swing.
It is. And for this specific report, the implied move is projected to be around 12%. So it tells us options traders are pricing in a fairly significant potential fluctuation around the earnings release.
Even though past moves have been muted.
Right. It acknowledges that potential is still there, even if it hasn't always materialized recently, reflects that growth stock volatility and the uncertainty around profitability.
Okay, 12% implied move. Let's think about what could cause that move. What are the potential scenarios here? What would a really positive, surprisingly good report look like? What gets investors excited?
Right. For a bullish case, you definitely want to see stronger than expected backlog growth. That shows future demand is solid, which is vital with their longer sales cycles. Significant new enterprise customer wins would also be a huge plus. Shows they're penetrating the market.
More big customers signing on. Makes sense.
Yeah. And outperformance on margin control. So, a lower operating loss or better gross margin than expected, that would be very positive. Signals that efficiency is improving faster. But perhaps most importantly, if management signals a clearer, maybe faster pathway to adjusted profitability or becoming cash flow positive, that would likely be a major catalyst.
A clear line of sight to profit. That seems to be the holy grail right now.
Pretty much, yeah.
And on the flip side, what the red flags? What would trigger a negative reaction?
Okay, a bearish scenario. Well, weak headline revenue growth would be one, or even worse, weak guidance suggesting future demand is softening, widening net losses, especially after the recent trend of improvement, or seeing gross margins deteriorate. That would be a big red flag. Shows things might be going backward on efficiency.
Slipping on efficiency would be bad news.
Definitely. And any negative commentary about, say, customer attrition, losing key clients, or increased competitive threats, that would almost certainly weigh heavily on the stock.
Okay, pretty clear bull and bear triggers there. So given all this complexity, what's the one key metric, or maybe two, that you'll be laser focused on when that report actually drops?
For me, the two critical things to watch will be, first, revenue growth against that consensus number. Can they meet or beat that $65.93 million? Shows demand. And second, the progress on net loss per share. Is it still narrowing? Or has it stalled or, worse, widened? Those two, I think, will be the primary indicators of their operational health and trajectory right now. That's what investors need to see progress on.
Revenue growth versus consensus and the direction of net loss per share.
Got it.
So bringing this all together, after exploring Planet Labs, what's our overall leaning heading into this report? What does the data suggest?
Well, our analysis points to an overall neutral leaning. It's kind of balanced. On one hand, you have that weak but positive top-line growth and the improving margins, which is good. But on the other hand, the company still faces those significant macro and sector headwinds we discussed. Tight capital, the intense focus on profitability.
So a mix of positives and negatives.
Exactly. Our confidence score, just based on the data, is probably around a 5 out of 10. It's right in the middle. The consistent, modest improvement is there, definitely. But the sector volatility and the, frankly, lack of major positive catalysts recently keep that conviction pretty low.
A 5 out of 10. Makes sense. It sounds like a company making steady progress, but in a really challenging environment.
That sums it up well. They're building the foundation, showing impressive tech, but caught in a market demanding financial maturity, maybe faster than they can deliver right now. It's a bit of a waiting game.
A waiting game where execution towards profit is everything. Okay, so for people considering strategies around this, what does that 12% implied move suggest, especially given the muted history?
Yeah, that 12% implied move. Theoretically, it means volatility strategies like a long, straddle, or strangle could be considered by some traders. Those profit from a big move, up or down.
Betting on volatility itself.
Right. But, and this is the crucial part, the risk is that if the actual results and the guidance aren't significantly different from what everyone already expects, then the actual price move might stay muted, just like it has in recent quarters.
So the implied move might not actually happen.
Exactly. It's a balance between that potential for volatility priced in by the options market and the likelihood of a real catalyst actually driving that big move. History suggests Planet Labs needs a true game changer in the report to really swing big.
Understood. Potential versus probability. Well, there you have it, a comprehensive look at Planet Labs and what to expect with their upcoming Q2 FY 2026 earnings report. We've covered analyst expectations, their track record, market sentiment, and the key things you want to watch for.
Yeah, and the big question really remains. Can Planet Labs keep navigating these challenges in an emerging sector while clearly showing that path to sustainable profit? Considering how the market's demands are evolving, what fundamental shift, either in their business or the wider industry, would truly unlock their long-term potential? And maybe more importantly, how might you spot that turning point when it happens? Something to think about.
Definitely something to consider. Thanks for tuning in to Investing Talk Podcast, and we'll catch you next time.